Welcome to the online class about how to get paid as a small business owner. My name is Juan Salas. I am a UNR Extension business instructor. So, how do you get paid as a small business owner? First, you have to answer one particular question. How is your business structured for tax purposes? And this is very important because different rules apply to different tax structures. Consequently, how you get compensated will vary from one business structure to the other. How is your business structure for tax purposes? Are you a sole proprietorship? Are you a partnership? Are you a corporation? Are you an S corporation? In this particular video, we are only explore the scenario of sole proprietorships and small businesses that are structured as one-member LLCs. Let's review. If you operate your business as an individual, or you and your spouse operate the business as individuals, you are taxed as a sole proprietorship. In the case that you open an LLC and the only members is you and your spouse, you are also taxed as a sole proprietorship. Once you know that you are taxed as a sole proprietorship, you have to take into account two important things. First, any business has income and expenses. In the case of a sole proprietorship, the net profit, which is the result of net income minus expenses, it is the responsibility of the sole proprietorship or owner. In this particular case, the net profit of the sole proprietorship is going to be considered income for the owners. Doesn't matter if the owner is the LLC, it will get taxed at the individual level. The other important point is that owners of the sole proprietorship can draw money from the business at any time at their discretion. This can be a great thing, but it is very important to understand that that money that comes out of the business, it is not tax deductible. It will not decrease the net income. Therefore, the owners will have to take care of any tax consequences related to that net income. A very important point is that owners' draw are not subject to payroll withholdings. You do not discount Social Security on Medicare taxes. Owners' draw are not a payment to yourself from the business. You are not an employee of your business. You are not an independent contractor from your business. You can have other employees, but you are not one of them. A very important reminder is do not make personal expenses from your business account. If you are a business, you better behave like a business. IRS has a lot of publications that cover this subject, and they suggest very strongly do not make personal expenses out of your business account. This can only bring you trouble down the line. So far, we can see that making owner's draw is pretty easy and is very convenient. That's one of the good things about having a sole proprietorship. But you have to be very careful because owner's draw can take away capital that the business needs in order to operate and sometimes grow. So make sure you take care of the business so the business can take care of you down the line. Ideally, owner's draw should be taken out of the profits. If you're not making a profit, make sure that you change something within the business because that is not sustainable down the road. If you are expecting to lose money at the beginning of the business, make sure you have some funds aside so you can use them for personal expenses. As we mentioned it before, owner's draw are not tax deductible. They are not considered an expense. And this is very important when we talk about taxes related to the net profit of the sole proprietorship. Remember, the net profit is going to be the responsibility of the owners and it will be subject to taxes. There are many types of taxes that apply to a sole proprietorship. We have state taxes, we have federal taxes. In this particular video, we're going to talk about self-employment taxes at the federal level. The tax rate of 15.3% applies to the net profit of the sole proprietorship. So Proper planning is imperative right now because you have two things going on at the same time. One, the owner's draw are not deductible. It will not decrease the net profit. And you have to comply with your tax obligation of self-employment taxes that are based on your net profit. In one side, you are taking owner's draw for your personal expenses, and on the other side, there is money also coming out to cover that tax compliance obligation. Before taking this owner's draw, you have to make sure you have enough money, enough funds put aside to cover that tax obligation. If you have not enough funds to cover your taxes from your net profit, you should think about making more money or reducing your owner's draw. A wise businessman has to know when and how to take this owner's draw. Because if you don't have enough funds to cover for your tax obligations, you should reduce your owner's draw, or you should start making more money. As a business owner, you should consider self-employment taxes as another cost of conducting your business. The same as marketing, the same as training. Self-employment taxes, it is just something that happens because you are doing things right. You are making a profit, therefore you have to pay self-employment taxes. To recap, sole proprietorships is one of the simplest and easiest way to operate a business, even though you have an LLC and you are taxed as a sole proprietorship. But it comes with great responsibilities as well. As a business owner, you have to put money aside for your self-employment taxes. You have to make sure that you are not taking too much money as owner's draw from your business. Otherwise, your business cannot operate and it will damage its cash flow. My name is Juan Salas. I am a UNR Extension Business Instructor.